So as you can see, we are in an active trade, and just between Thursday and Friday, you had the opportunity to catch over 200 pips inside of our trading app. So if you stay until the end of this video, I'm actually going to sweeten the deal for you. If you join our trading club on this video, I'm actually going to give you an incentive, but you have to wait until the end of the video. Hey everyone, the professor here, and we are going to break down crude oil from the weekly chart all the way down to the 15-minute chart. We're going to give you what it takes to be profitable this week when it comes to crude oil. Now, I want to go over to the full chart real quick. And before I jump into the actual charts, let's talk about some of the recent fundamental news that is coming out. And this was an article that was produced yesterday where oil prices could spike up to 20%, okay, if the Middle East conflict disrupts the Strait of Hormuz. So again, this is just some of the headlines that we are talking about when it comes to crude oil. So we are going to give you all the information that you need to be successful with crude oil on this video here. And if you stay until the end, we're going to give you some more information that's going to help you on your trading journey. Okay, so let's go ahead and dive right into the analysis here. Now we are starting on the weekly chart. Obviously, again, happy new year to you and your families. We have completed our first week of crude oil trading, and we had a very positive week with regards to crude oil. So that is our only candlestick that we have for 2024 so far. But the one thing that stands out, and this is why we were bullish on crude oil, is that in this weekly candle, we did close above this area very tightly, but we did close there, as you can see right in here. Okay, so this is why my projection is that we are going to see higher prices with crude oil. So again, we're going to give you the analysis as we move forward. Okay, so make sure you watch this entire video. So let's get rid of these drawings here. And now that we kind of take a look at that, we're going to go ahead and move over into our daily chart. Okay, there was our day right in there. And so you can see here on the green candle. Now we're going to start looking at crude oil. This does not mean, right, that even though my sentiment is that we should go higher on crude oil, that we're not going to have some pullbacks, right? We're not going to see something that's going to give us a pullback that will give us a better entry. So we're going to be looking at this, and this is why we're going to break it down on the multiple time frame analysis. You do have to understand that we are now getting into a heavier winter season, so the demand for fuel and for gas will probably be lower. And if the demand is lower, this is where we could see price fall, at least temporarily. So understanding that because of the Middle East conflict, price can go higher, but also because of the demand being less if the winter storms continue to get stronger here in the United States, then that demand falls, which means price will fall as well. So those are the fundamentals, but we are going to focus in on the technicals because we are going to trade what we see and not what we think is going to happen. So let's get back into our chart here. And the first thing we want to do is on this daily chart, we want to go ahead and make this a little bit bigger. Okay. And we are understanding that we are in this critical zone right in here. Okay. And you know, even though we look right here, I'm going to kind of change this because I like to make it kind of a different color. Okay. We can see right in here that we have had, you know, previous resistance, and we've also had previous support. So we are at this key level right in here. Okay. Right in here. So we have to understand that that key level is going to be very, very important for how possibly we start the week. Now, as we look at that, we are going to draw a Fibonacci retracement from where this price began to fall to this low right in here. Okay. You can see that we have clearly passed the 61.8, and we're starting to get into that 78% percentage area, which I normally leave blank up here. And so we can see that we are not only in an area of possible resistance, but we've also encroached the 61.8 and we've gone higher into the fib levels. So I'm going to leave those fib levels up. I'm going to leave this initial daytime resistance as we move down into our 8-hour chart. Okay. Now, as we begin to zoom in here, we're going to begin to look to see if we see certain type of trends that are happening at this level. Now, the one thing I do want to mark up are these equal highs right up here, right? This is our initial target area on that setup that I showed at the beginning of the video, in which we are still actively in, especially for those of us that are swing trading. And I think this is why it's so critical to kind of look at your trading strategy. And this is why I encourage the members in the app to maybe have multiple accounts, because we do a lot of scalping of 20 pips or 20 points at a time. When we go in, we cash out, we go in, we cash out. And we do that 2 or 3 times a day. And I give you all that information in the app as we go throughout each day. But we also have swing traders that are trading in both Meta 4, Meta 5 platforms, TradeStation, futures. And so those are longer type of trades that you're willing to hold for days or weeks or months. And so this is why this is still an active 200-point positive trade right now. And we're hoping to target these highs up here nearly at $79 a barrel. So I want to give you perspective on each scenario. So the first thing I want to do is I want to go ahead and grab a rectangle here, because understand that zones, okay, are not a precise area. So the first thing I want to do is I want to have that zone there marked up. Secondly is I want to grab this point here and this point, and I'm just going to lay this here now for reference, because I want to see what this does, okay, at the beginning of the market. Okay, we have 2 touches there to the high. If I was to extend this, right, I'm not going to force it. That's not going to fit. So right now, I have 2 confirmed touches there on this current trend line. Okay, so we are now beginning to draw a picture about where crude oil is, and we begin to develop kind of a game plan, okay, for what we are going to do. So as we kind of look at this, we want to understand that we first have to wait to see what price is going to do at this current area of resistance, which is roughly right about 73.92, 73.96. And so it did wick and hit 74.17. Okay, but then it rejected and closed, which is really the key word, at 73.90. So we may see a pullback, we may see where the price gaps, and we're going to talk about that here as we dig deeper into our analysis. So now as we go into our 4-hour chart, again, we can see this a little bit clearer. Now we can adjust trend lines if needed, but again, we can see here, right, that we have this double touch there, and then we have this area here that touched right in here. So I'm going to go ahead and get rid of this one for now, and we can see that those are our 2 touches of the trend line. Okay, those are our 2 touches of the trend line. Now, if we want to remark up this fib level from a 4-hour perspective, right, we can look at this fib level from this high to this low, okay, and we can begin to have some type of congruence where we begin to see things look kind of the same way. And again, here, okay, same thing here. I made that fib level white. Okay, we can see here that again, we did pass a 61.8 fib level, which was at 73.49 according to this trading view chart, and we inched a little bit higher, but we did not close above 74. And I think that's so important to remember, that we want to see candle closure. Now, sometimes a candle does close above or below a certain area, and sometimes that's a false breakout, right? But understanding that in this particular point, we did not close higher than 74. So as of right now, price, when it closed on Friday, it respected this current trend line and this current zone right now, because it did not close higher than the zone. Even though it wicked, right, it did not close higher than the zone. So keep that in mind as we move forward. Okay, so we're going to keep up both of these fib levels. We have our trend line. Okay, we can clearly see here now that we are on the 8-hour chart. Let's get back into the chart here. Okay, that once we got to this price point right here, okay, we begin to move down. We begin to get bearish, right? So we did not create a higher high. Now we created a high here, and then we had a lower low, and then we had a lower high, and then we had a lower low, and then we kind of matched here. But now here we created another still lower high. We're not going to change the trend until we break this trend line. And actually, I consider the trend to completely change once we go above this 76. Okay, then we're going to go higher. In the meantime, we can possibly come back up to touch this area again and then continue to drop. But this is going to be a very important area right here, because once we do close above this 74 zone, we have the potential to see this right here, where we had price come up, come back down, and then head back up higher towards $76 a barrel. And again, we just talked about it on the fundamentals a minute ago. Anything crazy that happens in the Middle East is going to drive the price of crude oil higher. Okay, so this is where we are going to wait now to kind of take a look at what's going to happen. And we will identify the gap here and give you some possible setups as we near the end of this video. So, at this point, hey, if you're definitely getting some value on this video, if you're getting some value from my consistent crude oil analysis, you can definitely drop that thumbs up and like the video. If you're brand new here, welcome to the Professor Trades channel. We focus in on oil. We're going to be introducing some other ones as well, but we're going to currently invite you to join us in our trading app, where you're going to get so much value in that app with regards to learning articles, a chat feature with over 100 traders from all over the world who are some pretty damn good traders, and they're just continuously adding value in the chat. So whether you're a London trader, a US session trader, there's always somebody on in the chat talking about crude oil, futures, Forex, and other pairs as well, from gold to the indices. So we definitely encourage you to join us. You can join anytime, you can cancel anytime. There are no contracts, but you're going to see the massive value for less than $1 a day. I can guarantee you that you are going to make your monthly membership and a whole lot more. So jump in the app, give it a try, and you're not going to be disappointed. Okay, so let's get back into the charts here. And now we're going to drop down to the 1 hour, right? Because I want you to start looking at price action from the 1 hour. Okay. And so again, you can see here again, there's our zone, right? We ended up in this consolidation area as we kind of wrapped up on Friday. We were kind of stuck in this area right in here. Okay. Let me get rid of this right here. So we need to kind of wait to see what price is going to do at that trend line and at that zone. And this is where we begin to develop a game plan right in here, because you're going to have a couple of scenarios that are going to happen or not happen depending on where the market opens, okay, on Sunday evening, 6 p.m. Eastern Standard Time. Okay, so understand that, first of all, this area right here is also going to be our gap, meaning this is where price closed on Friday. And again, we'll talk a little bit more about gaps in just a minute. But a gap is basically a difference of price, basically where price closes and where price opens. If there is a difference in price, that is a gap, whether it's 1 penny, 1 pip, or 100 pips. A difference of a difference of close to open is what's called a gap. Okay. Now, gaps could stay open for minutes, hours, days, or weeks. So you have to use caution if you are going to trade the app. For me personally, I trade the app only when there's at least 30 pips or higher to gain in either direction, right? Whether the gap opens lower or opens higher, there's got to be at least 30 points or more. Usually when a gap opens, okay, it usually continues in that same direction. So here's an example here. Let me go back to the full chart. Okay, let's say that the gap on Sunday opens up here. Okay. Usually what will happen will be that price will continue to a certain level to pull away from the gap. And then eventually we close this gap within a few hours or a few days. Now, most gaps close within 24 hours. But again, in today's volatile market, we can't always assume that. Okay. And then in the opposite direction, let's say that we know this is where price closed. Let's say that price gaps down here on market open. Same thing. Usually you'll see price go away for a while, and then what will happen is price will come back up to close the gap. So in these scenarios, understand that if you are going to trade the gap, my advice to you is at least 30 points or more, and use the lowest lot size or the lowest contract size, because understand that this price could stay open for minutes, hours, days, or even a week or so. Okay, now most gaps, from back in my research, within 24 hours, gaps close, but we have seen some gaps lately that will take 1 or 2 days. So understand that if you are going to trade a gap, you might be in that trade a little bit longer, but it might also give you the opportunity to add additional positions to then continue moving to close that gap. That's a strategy that we talk about inside the app. And again, it's just a way that you could add more positions, but not over trading and not over lot sizing. So you should never enter a trade that you know that may stay open a little bit longer than just a few minutes or a few hours, especially when it comes to the gap trading. Okay, so those are our two scenarios for the gap. I'm going to kind of move this over here. So just to kind of show you. So what are we looking at with regards to this right in here? So let me go ahead and wipe this out. I'm going to remove these drawings, because what I want to start doing now is just kind of go back, okay, and just again looking at where price is, right? We are right here, right now. We're at a critical area, and so we already talked about that trend line, and that's the only thing I'm going to leave up here, right in here. We'll go from here, and we're just going to go down into this area right here to see what happens. Okay, let's move this up a little bit. Okay, so, we've got, again, all those multiple touches there, but we are at a critical area. So if we get rejection from this area, then we can possibly see some type of short position like this. If we get this rejection, right, you would not want to go higher than this high right here, and you'd want to bring it down to these lows right here. So that's if we get this rejection. Now remember, because there's probably going to be a gap, you are going to want to give yourself time for this to develop, meaning let the gap open itself. Now, if there is no gap, again, market can move quickly, especially at the beginning of a session. Okay, this is something that I would look at if price is still here 24 hours later. Okay, and we are always looking for 20 pips or points. Okay, and secure. And what I mean by secure is, do you want to take money off the table? Take it off the table. If you want to protect it, you can protect it. Okay, so we encourage you to take profits as much as possible. That is going to be important for you to grow your account. Take profits. Don't let winners turn into losers. And at the end of the day, 100 break evens does not pay the bills. So take your profits, right? Or enter 2 positions, cut the lot size in half, take profits on the first position, and then you can leave your second position open if you want to hopefully swing trade that position a little bit more. Okay, so this is what we're looking at if we get rejection. Now, if we do close above this area, okay, what we should be looking for is for price to come back and retest the trend line and the zone. Okay, I'm gonna move this over here. Okay, and then at that point, you're looking for a long type of position, something like this. Okay, where price would come back up, and this would be all the way back up to these highs, which is that current trade that we are in on the higher time frame, and you would want to go no lower than this wick right in here. Okay, so that would be that scenario if price can close, and again, that's the key word here, close above, and you see the retest, and then we can see price action moving in the upward direction. Okay, so those are some of the scenarios that we are going to be keeping our members updated in inside of the app. So again, we do need to wait for market open. We need to see if we wait any gaps. We are at a critical state here. Okay, again, this level is about 73.90. For those of you that are watching this maybe on a smaller device or cell phone, I do want to call out some of those areas. So this 73.90 area, 74-ish area is going to be important to look at with regards to current price action. Okay, with current price action. So we did close just a bit higher than this high right here. So in essence, we did create a new high here. So again, what we're probably going to see is, what I'm anticipating is possibly some type of pullback before we continue higher if we go higher. Okay, now a good fib level to look for there would be from this low to this high here, and see if we can get that fib level to come down into this. Let me grab a rectangle, right? I see some liquidity maybe still here. So if we can get maybe price to come back down into this 88.6 area, okay, that would give us a nice possible buying opportunity. It would look something like this, because the 100 should always be your exit, right? Back up to these highs here, okay, and then the 100 would be your stop loss. So a very tight stop loss. Okay, I don't always put it right at the wick, because obviously they know that most retail traders are there. So a little bit below the wicks, and then maybe add your spread. So something like this, that still almost gives you a 4-to-1. So if we do get this pullback, this is where I would begin to look for that next possible buying opportunity with a very tight stop loss. Okay. Of course, if we break here below, the reason why that stop loss is there is because if candles close below this 100, then we are probably going to retest these lows down in here, right? So these are all the possible scenarios, and this is kind of the beauty of being connected in the app. We update you almost hourly throughout each and every day. And so I want to kind of invite you, I mentioned this at the beginning of the video, for anyone who joins our trading club today or who watches this video, I'm actually going to throw in a 30-minute coaching call with you so we can talk about your trading. I can give you some tips on whatever it is. I'm going to throw that in as part of your membership. Okay, so if you sign up today for the trading club, and again, you can cancel anytime. Our retention rate has been 97% because of the value you're going to get in there. I'm going to serve you, and you're going to learn so much, not only from myself, but from all the other traders around the world as well. But if you sign up on this video for the trading club, I'm actually going to throw in a 30-minute coaching session. So what's going to happen is once you sign up, I get an alert. I'm going to welcome you. I'm going to welcome you in the chat zone as well. And then I'm going to send you a private link to your message in the app so that you can go ahead and jump on an open calendar date and time that works good for you. And then you and I will have a 30-minute coaching session. We can talk about whatever you want. Usually I go a little bit longer than 30 minutes anyways, but you're guaranteed that 30-minute coaching call if you sign up on this video. Okay, so I hope you got some value. If you did, again, smash that like button. Again, continue to follow this channel. We focus in heavily on crude oil because it's very, very profitable. But again, we're also going to talk about natural gas, gold, and the indices as well. Thank you so much for watching. Have a fantastic trading week, whether it's trading in our group or trading on your own or trading with other groups. We always wish you the best, no matter where you are at, to improve the quality of life for you and your family. Lastly, make sure that you are kind to someone today. You can call them, text message them, or just pick up a tab for a stranger, buy a cup of coffee, right? Make the world a better place. You don't need a lot of money for it. You can just do it and pay it forward as well. Thank you so much for watching, and we'll see you on the next video.